Americans bought more new homes in April, fueling debates that the shattered housing market could be steadily improving. Data released this week showed sales increased 3.3% in April from the previous month to a seasonally adjusted annual rate of 343,000. Apart from the South, sales were up in all regions of the US. The median price rose to $235,700, a slight increase from March. Despite this latest gain, the pace of new home sales is well below the annual rate that economists equate with healthy markets, suggesting to some analysts that there is still a long way to go before the market is said to be improving. Still, the gains across the US did contribute to growing evidence that the home market could be finally rebounding nearly 5 years after the housing bubble burst. Terry Loebs, Managing Director of Macro Markets LLC, joins me down the line today to share his opinion on the latest housing figures. Terry, thank you for joining me. Does this data suggest to you that the battered housing market is starting to recover?
Not necessarily, and the reasons why I would say this is that the new home segment comprises only about 15% of the total U.S. housing market, and the total market is plagued by concerns of a vast supply overhang. Also, to the extent that growth within the new home segment is real, that's encouraging, but you need to bear in mind that in looking at even the year-over-year percent change data, the recent activity is being compared to a low and depressed base. For example, the 717,000 new starts that were reported for April last week is about half the rate of what many economists consider to be healthy. And finally, the government data on the housing market can be very noisy and in some cases is simply not meaningful, especially when you look at it on a month-to-month basis.
What, in your opinion, if any, are the most positive signs surrounding the US housing market?
Well, there has been a pickup in investor activity, which, while it's been somewhat more muted in recent months, it still remains about 30% of all transactions. So investors coming in with all cash are helping to clear the market, and there's clearly been some more capital mobilized to pick up some of that inventory.
In your opinion, how can the federal government help the recovery of the US housing market?
In my view, it's very important to find a way to help the market find its bottom, if not completely on its own, mostly on its own. So that translates into a lighter touch by the federal government, in my view. I think it's important not to micromanage the problem, but to think perhaps more strategically. Efforts that I have long advocated include those that address the dearth of risk management for stakeholders in the housing market. It is a huge asset class. It's a huge risk that basically entails making a significant leverage bet on an illiquid asset, and that's both at the consumer and institutional level. And notwithstanding the implications of that sort of risk, there really aren't effective ways in this day and age, as advanced the state we live in, to effectively manage that risk, again, at either the institutional or consumer homeowner level. And lastly, and in general, I would say and advocate that any attempt to address and facilitate a recovery in this market proactively, that it be done in a way that avoids moral hazard.
And lastly, what are your predictions for the US housing market for the rest of 2012?
Well, the rest of 2012, I don't think it's going to be very exciting, to be honest with you. We had a national boom and a national bust, and I expect an uneven, inconsistent recovery that will likely be far more location-specific.
Terry, thank you for taking time to speak with me today. As usual, the Dukas Copy TV team will be providing you with plenty of exclusive interviews. Goodbye for now.